I'm Josh Duvall, certified financial planner, registered tax preparer from Joshua Duvall Financial Planning and Accounting. I hope you're having a wonderful day. Just wanted to come and make a video and bring a little bit of an idea to you here. For those of you that have cash that's on the sidelines and you just don't know how to get it into your investments, how to get it into the markets. It's a really common problem for folks that were raised as savers as opposed to investors. Come across people all the time that they have no problem stashing cash away in a bank or even in CDs, but they just don't know what to do, how to systematically get their cash invested, as well as folks that are coming from, being able to get cash from a sale of an asset, like a rental property, for example, or people that have received a large amount of cash as a result of an inheritance. There's many factors, including taxes. We'll talk a little bit about that. But what I've tried to do is help people understand kind of how to systematically move money into your investments, into the markets in a way that makes sense to you and also gives you an opportunity to capture upside if it happens to be moving up as you're moving money in, or protect the rest of the cash from any sort of downside volatility that happens as you're investing. So the common phrase here is called dollar cost averaging, and people think about that more in terms of making contributions from like income into a 401k or into an IRA. And the idea is that when stocks are down, when prices are lower, your fixed dollar contribution buys a larger number of shares of the things that you'd like to own. And when prices are higher, your fixed dollar contribution buys a smaller number of shares. So the concept is that over time, you're going to have appreciation on a larger number of shares as you systematically move money into the markets. Now, all of that kind of theory goes, out the window when we've experienced the type of volatility that we have here in 2022. Our most recent high was back in December. The markets fell close to 30% from that point, and now have kind of recovered. What looks like June 16th is maybe the bottom of that, of that trough on the downside of the S&P 500 bear market. So we'll see. Only time will tell. But what I've tried to do is help clients understand to take a sort of bucketed approach towards something that might have to do as a life event inside of their own in their own lives, or an event that might affect broader markets. So for example, let's say that you have an inheritance and you've received $100,000, $200,000, $300,000, $400,000 worth of cash as a result of an inheritance. What's the best way to get that into your investments? Now, obviously for certain accounts, IRAs, 401ks, Roths, etc., you're going to have, contribution limits, right? You can't just move all of the money in for Roths and traditional IRAs. It's a very small number relative to the inheritance. But when you're looking at things like adding money to 529s, opening up brokerage or taxable accounts, those are areas where you have the ability to fund at kind of a much higher level, as well as SEP IRAs for many of the business owners. So the way that I've tried to help clients understand that is to take an event, let's say the end of the year or a 6-month period or a quarter, and use that as a means of gauging what types of steps you want to make. You don't have to have the entire plan fixed at the onset, right? You don't have to say, I'm going to get all of this money in between now and X date in the future, regardless of what happens, right? You can actually take this in kind of steps. So what I've had to do with clients is explain, for example, the end of the year, or maybe even the midterm elections, if that's something that we feel like could be important as a bellwether of kind of where the stock markets might go moving forward. Let's take a chunk of money, whatever that percentage is. It's after your emergency fund is already funded. It's after any sort of debt and other things that should be paid off have been dealt with. But now you have this excess cash that we don't just want sitting in the bank getting eaten alive by inflation. And so what we do is maybe take a third of that, or a quarter of that, or 10% of it, whatever number you feel comfortable with, and systematically move that into your investment portfolio. Now, what's the risk of that? Well, the risk, of course, is that the markets move drastically upwards in a short amount of time. and the cash that wasn't invested drags down the performance of the portfolio. This is commonly called cash drag. It's a very common issue with investors that are too cash heavy. Of course, the upside is that if you have another move down, maybe June 16th was just testing the bottom, and we move another 20% further down from here, well, then of course the majority of your cash has been protected from that downside move, right? These decisions are very, very important. The smaller the time horizon, in the next 6 months, in the last 6 months, in the next 18 months, these will be seen as important decisions. Your portfolio performance for this portion of cash is going to be largely influenced by what happens in the markets, and those things are kind of out of your control. But the further you zoom out, the less and less important this decision becomes, meaning if you happen to put some money in and you just don't get, the markets go up 5-10% between now and the next 6 months, and it's like, man, I wish I would have had all of the money in instead of just a half or a quarter or whatever it is, that's going to kind of hurt now. But 10 years from now, 15, 20 years from now, that decision will not be seen as the most consequential thing that happened in your financial life. So one of the things I try to do, and I hope is encouraging you to think about this in kind of a new way with this video, is that the longer you zoom out, the bigger the time horizon, the further out you get from these decisions that seem really critical right now, the less and less weight they carry compared to other things that are directly in your control. No one has a magic ball, magic 8-ball, a crystal ball. Nobody knows exactly where the markets are going to be 6 months from now, a year from now, 5 years from now. But when we zoom out to 10, 15, 20, 30-year segments, we're able to look historically and see that markets perform exceptionally well. So the idea isn't, how do I figure out how to maximize some sort of very short-term window opportunity, kind of making a gamble or a bet that has significant risk? Rather, it's how do I control the things that I'm completely in control of? The amount that I'm saving, what's in my emergency fund, the way that I'm managing debt and cash flow, the tax decisions I'm making. Am I diversifying my investments from a tax standpoint? Do I have qualified money that's deferred? Do I have Roth money? Do I have capital gains money, the taxable accounts? How are those things that are directly in your control being managed? And then using some prudence, like a dollar cost averaging approach or a bucketed approach where, hey, between now and the end of the year, over the next 4 months, we're going to get X amount of dollars into the market. And then we're going to reassess and reevaluate. Do I feel comfortable moving the rest of the money in? Do I feel like, wow, that, things have gotten a little bit risky and I'd rather make some other decisions and maybe hold back? You don't have to have the whole thing figured out at the onset. But what you do need to do is figure out, where am I trying to go and what type of strategic decision can I make, eyes wide open, understanding all of the facts, taxes, investments, planning, and understand the type of decision that should be made that's prudent. I understand what to expect and how these choices of moving money into my investments from an inheritance, from a sale of an asset, from a savings account that you've just never invested. How does that decision help me get advanced and move forward towards my goal? So hopefully this is a discussion that is helpful for you. If you have questions about these types of things, planning decisions, investment decisions, whether they're related to the current, kind of global economic markets that we see right now, or something personal to you, a down payment for a home or setting up a child's college fund, I would love the opportunity to talk with you about that. Of course, clients, feel free to book a meeting directly on my calendar. For anyone else, would love the opportunity to connect with you. Feel free and shoot an email, josh@joshuaduvall.com, or you could fill out a form on my website, joshuaduvall.com. Hope you have a great day. Hope this was helpful for you. Thank you so much. Bye-bye.